Hi, my name's Andy and you're watching Andy's Fire Club. Holy smokes guys, today we got a special video for you guys. Now I know I said last week, someone pointed out to me that I said something about the market being at all-time highs. Well, that all has changed. I'm sorry, I filmed that video in advance and I think it uploaded on Wednesday, I believe, and it came out at a really bad time because that's when the market was crashing. So maybe some people were watching that video and going, what the hell is he talking about, the market being all-time highs, it's crashing. Well, sorry, I filmed that in advance. Anyways, today we're sort of shaking it up. We're making a special video for you guys talking about the recent market crash and how to deal with a lot of you who might have stocks in the stock market already and seeing your portfolio decline by more than 5% every day. So I was talking to a friend today and she asked me, should I sell my stocks? And some of you may be surprised at my answer to her. I told her, no, you should not sell your stocks. And she was really confused. She was like, why shouldn't I sell my stocks? The market is crashing and clearly things are gonna only get worse from now, right? So as some of you know, the reason why the market is crashing is because of the outbreak of the COVID-19 coronavirus. And new cases of the coronavirus have popped up all around the world. It's been seen in Italy, it's been seen in the United States. There's cases all over the world now. South Korea is pretty bad. So that's the reason why the markets are shook, because of the virus. Now there's a lot of fear going on in the market right now and everyone's selling their stock. So why am I telling you not to sell stocks? Well, I'm telling you not to sell because you don't know where the bottom might be. So maybe we've hit the bottom already, right? Maybe if you sold all your stocks now and the market shoots back up, well then you're gonna be forced to buy back in at a higher price. Or maybe you're right, maybe the market is gonna get a lot worse. And if you sell now, then the market keeps on tanking and you've saved yourself from further losses. But the problem is that if you sell now, how are you gonna get back in, right? So you sold now, convert it into cash, and then you're sitting on a pile of cash and you're thinking, what am I gonna do with this cash? You might be forced to buy back in at a higher price, or you may have to be forced to sit on your cash for a long time. And the problem is that if you sold your stocks for a loss, then you've actually still lost money. So I think it's in times like these, and the reason why I made this special video is to remind you guys of a famous quote by the famous Warren Buffett. And what Warren Buffett said is that time in the market is better than timing the market. So what does he mean by that? Well, time in the market is when you buy stocks and you just hold. And no matter what the market does, the market might go up or it might go down, and you just hold that stock throughout the years. And in the long term, markets tend to go up. So if you hold that stock for a long time, then the market will go back up. But timing the market is different. Timing the market is reacting to all these emotions of fear and greed. So timing the market is when, in situations like this, when the market is crashing and you're selling the stock just because you're giving into that fear, you're afraid that your portfolio might drop further in value, and then you sell the stock. And when everything is good again, when the market is going back up, you go, I gotta buy back in. So you keep on buying back in. So remember, you sold at a loss when the market is going down and you're buying back in when the market is going up. So you're losing money that way because you sold at a loss and you're buying back at a higher price. So what you should be doing is, if you have cash, then maybe you should buy this dip. So if you already have cash on the side and you don't need to sell your stock to buy more stock, then maybe you should buy some stock and don't go all in at once, because the market could drop further, and that's perfectly reasonable for the market to drop further given the conditions that we're experiencing right now. Or it could go back up. So if you have cash, maybe start buying in little by little. Now don't get mad at me if you lose money, because I'm not telling you which stocks to buy and sell. I'm just saying that maybe this is a potential opportunity for you to take advantage of some deals that have popped up in the stock market. So what you want to be doing when you're investing in stocks is buying when everyone is selling and selling when everyone else is buying. So you kind of want to take the contrarian approach to this. Do the exact opposite of what everyone else is doing. So if everyone else is selling, you don't want to join the hype and sell your stock, because when everyone else is selling, then the price is going to crash. And then you're not going to get a good price for your stocks. You're going to have to sell them at a discount, which means that sometimes you would lose money. You'd have to sell them at a loss. And same thing when it's going up. When it's going up, you're buying, and everyone else is buying, and if you're buying too, then you're gonna bid up the price, and then you're not gonna be able to get a good price for it. So the last point I wanna mention is that I think we should all be kind of happy about this crash. Now, I'm not saying that we should be happy about the coronavirus situation in general. I don't want you to get the wrong impression. This is a very serious situation. A lot of people are sick, people are dying. I don't want to make light of the situation. But I think as a whole, in the stock market, maybe it's time that a healthy correction can actually make the stock market run up for even longer. So if the stock market runs up too much too fast, that's what leads to the big crashes. Now, I know it seems like we're in the big crash already, but as of yet, the stock market has only returned to what the levels were, I think, back in around March of last year. So we've only lost like less than a year of progress. So I think the reason why you should be happy about the stock market crash and maybe even celebrate this a bit is because whatever stocks you want to buy, they're at much cheaper prices now. So I think before the crash, Microsoft stock was nearing $200 a share, and now it's come down quite a bit. And same thing with Apple. Apple's been going up pretty much in a straight line, and then now their stock has dropped down. I know a lot of you are trying to buy Tesla, but you haven't pulled the trigger yet because the stock price been absolutely skyrocketing. Well, Tesla stock has come down quite a bit too. I'm not saying that you should buy any of these stocks, by the way. I'm just saying that if you're looking to buy a stock, chances are it's come down in price quite dramatically. And now it's giving you an opportunity to buy the stock at a lower price. So if you just relate it to any other product that you're gonna buy. So for example, let's say you're into video games. You wanna buy video games, but you don't have an extra $60 to spare to spend on the latest game. Well then, let's say there's a sale and the sale is a 50% discount. So you can buy that same game for $30 instead of $60. Well then, you're gonna maybe buy that game, right? But let's say that sale becomes even better a few days from now. Let's say they do a sale on top of the sale, and then it's an 80% drop instead of a 50% drop. Then wouldn't you be even more inclined to buy that game if you haven't bought it already? Or if some other game, if all games were 80% off, then you bought that one game at 50% off. You might want to be tempted to buy all the other games at 80% off now. Now, sure, you lost a bit of gain by buying that first game at 50% off, but then you get all these crazy deals on all these other games. So my point is that you can apply this principle to stocks as well. It doesn't have to be video games. It could be anything. And if you apply this to stocks, let's say you were gonna buy Microsoft anyways, but then the stock has dropped by like 30 bucks a share, and now you can buy it for 30 bucks a share cheaper. Well then, shouldn't you be happy at that? You get to buy the same thing for a lot cheaper. So I'm not saying that I know where the bottom is. Obviously, I don't know how long this market crash will continue. Maybe by the time that you see this video, the market has crashed even more than what it is now. So I'm filming this on February 28th, and it's a Friday night. So we'll see what the market opens on Monday, but the point is that the market might crash even more, and maybe you should be prepared, and maybe you if you have cash, keep it on the side and start buying into stocks little by little, and then start buying into the stocks that you were watching. And I'll make a video on my stock portfolio soon. I will do a portfolio review, and I'll also make a separate video telling you guys what stocks I'm buying for March. And so stay tuned for that. So one of my economics teachers back in the university told me that professional investors, they actually love it when the market crashes, because when the market crashes, they can buy stocks for cheap. And I think maybe this is one of the cases there where we've had such a big run in the stock market, and it's been going up pretty much in a straight line for the past, I don't know, 1 or 2 years. And then now we have this crash, and maybe this is a potential opportunity, like the one that my professor was talking about, how when the market crashes, now stocks are cheap. And now this is when you can get in at a very low price. And if you have stocks that you previously made money on, now you're underwater on, well, maybe now is the time to start averaging down, right? So if you guys don't know what averaging down means, is when you buy a stock when it goes down, and then your cost basis, so your cost per share, how much money you spend per share on that stock, will be lower because it'll be the average of the two. So for example, if you bought, let's say at the peak right here, and then the stock market drops to down here, well then, depending on how much you bought, let's say you bought half and half, then your cost basis will be somewhere in the middle. So if you didn't buy this one at the bottom, then your cost basis will just be the whatever it is on the top. And then when the market is down here, then you're losing big time. So if you buy it down here, then your cost basis will be somewhere in the middle, assuming that you went half and half. Let's say you bought a little heavier when it came down here, well, then your cost basis might be closer to where it is now. So it gives you an opportunity to average down your position when the stock market crashes like this, assuming that you have more money to put in. So if you don't have more money to put in, I mean, this is why people say you should always keep a certain proportion of your portfolio in cash so that you can take advantage of situations like this. So if you don't have any cash, then you might have to sit this one out and just wait until the market goes back up, which I think unless you're buying individual companies that go bankrupt, I think the market will go back up at some point. Let's say you have an index fund, eventually the market will go back up. There has never been a 20-year rolling period where the S&P 500 has given you a negative return. So if you think about what that means that if you put in money into an S&P 500 index fund, you wait 20 years, you would have never lost money. So yeah, if you guys don't believe me, you can look it up. So yeah, anyways, that's pretty much all I wanted to talk about today. Is a bit of a shorter video just because it's a special video about this crisis that we're experiencing. Yeah, again, don't sell your stocks and just hold tight. I think we'll ride this one through. And I'm certainly not going to be selling any stocks, even though I might be down quite significantly on some of my positions. So hopefully you can see some of the logic in my strategy where I just prefer to buy and hold for the long term. And that saves me from a lot of anxiety because I don't have to worry about buying at the bottom and selling at the top and trying to find where the top and the bottom of the market is, because I just buy and I hold for the long term. And if my portfolio goes down 10-20% in the short term, I don't panic because I know the companies that I bought are good companies and they will survive the long term. So yeah, that's all I wanted to talk about today. As always, don't forget to follow me on Twitter and Instagram. I'll leave the links down below in the description. Make sure you subscribe if you enjoy the series and give this video a like. It really helps out with the YouTube algorithm. Thanks for watching.